Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis on Wednesday, September 3rd, 2014. Here's a daily chart of the SPY. And basically, you had a flat day again, and you had a flat day in pretty much all across the board. Your Dow was up 10 points, your S&P was down 1.5 points. The NASDAQ, however, was down. The NASDAQ composite was down, let's see. Here it is here. NASDAQ composite, it was down 25.5 points. And let's flip right over to a couple of things I want to talk about, because I always talk about, let's go to Apple. I can't talk and type, talking and typing. Okay, let's go to Apple. And the reason why I want to bring this up right away is because I always say the market tells us what to do, okay? Today, the market is beginning to speak. It's beginning to tell us what to do, okay? Apple is the first signal, all right? So Apple was down like 4.19%, I believe, today, okay? So with Apple being down that much, all right, it's basically wiped out like 2 trading weeks of volume. Or I'm sorry, 2 trading weeks of up move. Okay, all the way back down to here. Okay, so what that does is it tells you that, you know, there was some heavy selling pressure on a lot of volume today. It was 125 million shares traded in Apple. Normal volume is maybe 40 to 50 million shares, in that neighborhood. Okay, so you had more than 2 times the volume, and when you have a big wide range candle like this one, okay, there's more downside to be had. So traditionally, on a daily basis, maybe we'll put in a couple of bounce moves, couple of sideways days, maybe up a couple of $1 or so tomorrow, something like that. Maybe up into Tuesday, which is the Apple announcement, right, of their new product line, whatever that's going to be. New phone, or maybe an iWatch, maybe an whatever. And then all of a sudden you dump out, okay? So what I'm saying here is, this is the first signal that the market is telling us what to do. Sure, it's just an Apple, but let's go, well, we just saw the NASDAQ. All right, let's go back over to that. NASDAQ composite, what does that look like? It also looks like a reversal day, okay? This big red bar, which engulfed 2 days, basically, or, well, it was more than 2 days. That's a reversal day, okay? And when you have a reversal day, you have to take notice. So the NASDAQ had a reversal day primarily because of Apple's reversal day. But let's look at another reversal day, okay? Where is it? Where's my, here we go. IWM, Russell 2000 Index. What is that? Another reversal day, okay? So we know that the IWM never got to double top. It never broke to new highs, okay? The Dow got to new highs, okay? But it's actually making a bullish consolidation there, so we have to be careful. S&P through new highs, okay, going sideways. Could be around the top, could be sideways consolidation. We'll have to see, all right? NASDAQ, okay, new highs, put in a reversal day. IWM, small cap index, never close to new highs, reversal day. This is another sign of the market talking to us, okay? So what I'm saying is that if this plays out where the next cycle turn day takes hold, which is essentially next week, okay, it's going to be a sell 'em. It's just a sell 'em. You're going to have a correction to the magnitude. We'll see how it unfolds. But, you know, I'm going to go on record right now and say that if we have some more signs like this and the market does what it's supposed to do into next week, okay, it's a sell 'em. However, I said last night, and I'll say it again, these cycles can invert. Okay, so we can actually get an acceleration point to the upside, so you have to be careful. So if you're playing something to the downside, you have to know where you're wrong. You have to know where your stop out points are. All right, I just want to make sure everybody's aware of that one. All right, let's go move on a second and go over to the GLD. All right, GLD was up 50 cents today after the big down day yesterday. Not much going on, sideways. Get a couple more sideways days like and maybe put in another leg lower down here close to this double bottom, 119, 118, and then it would be a buy if that happens early next week. So we'll keep our eye on that. USO, oil, wild moves in oil. So you had the up move late last week. You had a huge down move yesterday on Tuesday. You had a big up move today, okay? And what does tomorrow bring? Well, we'll have to see. But I think lower prices are ahead for USO. That's why we haven't touched USO. I know some folks are short USO, but you're always susceptible when you're short the oil market to these geopolitical events. So you really have to be short the oil market when all the stars line up together, and they certainly don't line up here. So I wouldn't recommend being short the oil market, although I do think it goes lower. I'd rather look for a place to go long than to be short with all the geopolitical activity going on around the world. So that's my take on oil. What else do we have? All right, so let's talk a little bit about the rest of the week and what we might find. So tomorrow you have the ECB meeting, and then you also have the Bank of Japan meeting. So they're going to both put out announcements. My guess is they both put out announcements tomorrow. You'll see them early in the morning or overnight in the case of Japan. And what that means is that your currency markets are going to move, and probably the other markets will move as well. You might get some precious metals moving. You might get the stock market moving. And what I think is going to happen is I think you'll get a couple of gyrations both ways. But at the end of the day, I think the market will be up tomorrow, basically because the anticipation that the ECB might do something to jolt the markets is the only thing that would push it down. I don't think they'll say anything stupid. I don't think they'll say anything to put the market into a tailspin. So I think that it'll be a relief, and maybe we float up tomorrow, and then we start to talk about, oh no, the jobs number on Friday, what happens there? And the jobs number on Friday could go either way. It's how they want to interpret the phony jobs number, whatever they want to believe the jobs number is. Doesn't make any difference. It's how they react to it. So that's kind of how the rest of the week's going to play out. So it's more newsy, kind of jolt reaction, instant reaction in the market type stuff going on over the next 24 to 48 hours. So with that, I'm really looking forward to seeing, what I'd love to have happen is I'd love to float up tomorrow. I'd love to have like a sideways to maybe slightly higher day Friday, and then I'd love to be at the highs going into early next week, because I think that's the perfect setup for a dump out. And that's kind of what I'm looking for. We'll see what happens. It never plays out like you map it out, but all you can do is go with what your analysis tells you. Right now it's telling me we're starting to see the signs that the market is talking to us. Okay, so we're going to look for some more, and we're going to put on trades for the members accordingly, and we'll go from there. So that's about it for tonight. I'm David Frost. This is MyStrategicForecast.com. This was another episode of Common Sense Market Analysis. Thanks for tuning in, folks.